If you thought 2021 was a big year for crypto, then 2022 has the potential to be even bigger. In this film, we're going to analyze the top 5 crypto trends for the year ahead so that you can be ahead of the game. We're talking about the big forces shaping the future of crypto, and some may surprise you. But before we look ahead, these are some highlights and headlines from 2021.
I think there's going to be a lot of people out there that are completely mesmerized by what's going on.
Ladies and gentlemen, here we go.
Bitcoin.
It's been a huge week for crypto.
What is Dogecoin?
One of the hot financial trends on the internet is something called NFTs.
El Salvador is making Bitcoin legal tender.
Our company is now Meta.
DeFi.
This really does seem to be the buzzword.
Ethereum is making new all-time highs.
Nike is getting in on the NFT craze.
I am selling my explanation of NFTs, AFT, or actual thing.
We also did have bad news.
There's huge energy consumption here.
All cryptocurrency related transactions are illegal.
What is the Metaverse?
It's being referred to as the future of the internet.
If you thought this might just be a passing fad, you better think again.
What is Dogecoin? It's an unstoppable financial vehicle that's going to take over the world.
It's been a roller coaster, and 2022 has the potential to be a wild ride as well. So let's take a look at my top 5 trends for the year ahead. In reverse order, at number 5, will crypto ETFs go mainstream? The approval of the Bitcoin Futures ETF was groundbreaking.
Excitement over tomorrow's debut of the first ever Bitcoin Futures ETF is helping the cryptocurrency hit the highest level since April.
This is seen as a legitimizing moment for the crypto asset class.
I believe that in general, in the US, they're starting to look at how can we create a framework that allows this technology and the cryptocurrencies themselves to continue to evolve.
To be clear, this was Bitcoin Futures ETF, a bundle of all Bitcoin futures contracts in one price, where you can effectively sell or buy Bitcoin at a set price in the future. You're not actually buying or trading in any Bitcoin, you're just speculating on a price in the future. Now, the regulators in the United States have approved a Bitcoin Futures ETF. The hope is that they may approve what's known as a spot ETF. This would make it possible for people to directly invest or trade in Bitcoin or other cryptos without having to go onto crypto exchanges or the hassle of storing the Bitcoin. It means people like my mom, who has all her wealth tied up in pension and wealth funds, would be able to invest in crypto on traditional stock exchanges. Just to put this into perspective, in the UK alone, there is 2.6 trillion tied up in personal pensions. Half of all the money in the world is in personal pensions. So the emergence of spot ETFs in cryptos could open the floodgates to a huge surge in investment, the likes of which crypto has never seen before. That being said, the SEC has already rejected several proposals for a spot ETF. And although the futures ETF was a step in the right direction, the approval of a Bitcoin ETF would require significant change in stance from regulators. Number 4, will Metaverse coins go to the moon? In the past 12 months, the Metaverse has gone from a fringe concept to mainstream. It's on everyone's lips, and that's in no small part down to this guy.
Our company is now Meta.
In Q4 of 2021, in the wake of Facebook changing its name to Meta, the price of Metaverse coins have rocketed. This is how Bitcoin and Ethereum performed in Q4. Now let's take a look at the 2 leading Metaverse coins, Decentralized, which has risen 400%, and Sandbox, a mind-blowing 600%. What do all these coins have in common? They're all linked to games that are leading the way in what the Metaverse could become. Take Decentraland. It has over 100,000 players globally who can all buy and sell land in this virtual space through its own Metaverse coin called Mana. Like this piece of land that sold for $2.4 million. So this coin has its own virtual domain in a virtual ecosystem that can be earned by playing the game. And crucially, it's decentralized. It runs on blockchain and nobody owns it. The market value of the Metaverse is predicted to be over $800 billion by 2025. And with the growth of the Metaverse, there's a chance that certain Metacoins could shoot up in value. But investing in such a young market comes with serious risks. In the year ahead, we may well be seeing more Metaverse coins outside of gaming coming onto the scene. And coming in at number 3, next generation stablecoins. Because cryptocurrencies are so young, they are
Volatile. So volatile.
It's very volatile.
Bitcoin is very volatile.
Cryptocurrency has gone from hitting a new record price yesterday to nosediving today.
And for all of us who've invested or traded cryptos, we get it. Cryptos come with massive ups and downs. But stablecoins are different. They are cryptocurrencies, but as the name suggests, they're stable in nature, or at least they're intended to be. This is because they're backed by other real-world assets like the US dollar. So in times of economic volatility and fluctuations, stablecoins have so far proved a much more solid store of value. So far, US Tether and USDC coin have dominated. In 2021, they both grew by around 300%. They hold over $100 billion between them. But here's the catch, neither are decentralized. Their reserves are controlled by people or companies, and there's no way of knowing where this money is being held or invested. If, for example, the reserves are invested in traditional stocks, they would be vulnerable to an economic crash and potentially lose their peg to the dollar. But here's the thing. In the year ahead, we could well be seeing stablecoin challengers and the rise of algorithmically pegged coins that are fully decentralized. Although US Tether and USDC still dominate, their combined market share has actually decreased from around 90% in January 2021 to 75% today, with Tether taking the biggest hit. 2022 could be the year where we see newer competing stablecoins take an even bigger share of the stablecoin market. Coming in at number 2, the regulation that could stifle growth. Rapidly growing innovation always comes with calls for greater regulation. I mean, just look at the tech giants.
In July 2019, the US government targeted America's biggest tech companies.
Whenever you get to be a super valuable company, you're going to expect a lot of government attention.
And crypto's no different. It's now too big to ignore. And governments will increasingly be trying to find ways of better regulating the industry.
All cryptocurrency-related transactions are illegal.
In the past 12 months, China banned all crypto-related activity, and in Colombia, financial institutions remain barred from facilitating crypto transactions. India has no plans on a complete China-style crypto ban, but they will introduce a bill with heavy crypto regulation that could even include arrests without bail for anyone attempting to use crypto as a payment or a unit of account. And in the year ahead, more countries could be clamping down. In bigger markets like North America and Europe, we're likely to see regulation that restricts user privacy and imposes higher taxes on crypto. This has the potential to significantly slow down crypto's short-term growth, as governments try to implement their own central bank digital currencies, or CBDCs. Nigeria launched its e-Naira CBDC, while China, Sweden, and several Southeast Asian countries have already piloted their own digital currency. With 15 countries in the CBDC development stage, there's a chance that government-issued currencies slow down crypto's growth and even rival Bitcoin in the year ahead. And finally, we get to number 1, the biggest, most mainstream talking point of the year ahead. Could Bitcoin and Ethereum double in price? And the answer to that will depend heavily on this.
Inflation is on the rise.
Inflation is a real concern.
This could be a big test for the leading cryptos. If inflation continues in the coming months, will investors turn to Bitcoin and Ethereum as a hedge? Higher inflation is spreading around the world. It looks set to be the defining economic story for months to come. There's a chance that cryptos, especially Bitcoin, could benefit from this. Here's why. This is what the adoption of the internet looked like. Its annual growth rate was 62% a year. And this is the adoption of Bitcoin, 113% growth rate. That makes it the fastest growing technology in history. And the same can be said for the number 2 crypto, Ethereum. It's got the most developers, dApps, and user activity than any other blockchain. But the so-called ETH killers could stop Ethereum dead in its tracks. But Ethereum has 2 stumbling blocks in the months ahead. First, the long-awaited Ethereum 2.0 upgrade needs to be fast and effective. If it isn't, and this is the second point, so-called ETH killers could challenge Ethereum's dominance. So we'll be keeping an eye on the young pretenders, Solana, Elrond, Phantom, Polkadot, and others which have all recently reached all-time highs. Earlier this year, I made this prediction for 2021. $80,000, $100,000 look like they're coming closer and closer into the picture. Like most other crypto heads, I was wrong.
Bitcoin somewhere north of 200 and ETH closer to 15K.
We're gonna go probably north of 300.
220,000.
But in the year ahead, I know what my money's on. If you want to learn more about Ethereum, then click on the link and watch our film where we turn it into a superhero. And if you want to be ready for the opportunities ahead, then download the Currency.com trading app by using the QR code.